let me just quickly fix the presentation. Actually, guys, I was connected on my laptop, on my tablet as well, but now I'm kicked out, and I would like to keep it so I can see the chat. Otherwise, I'm requesting to join again. So if you can accept me from my tablet, so I can see the chat as well, because now sharing the screen I cannot. Oops, I think I'm in echo. Can you see the presentation correctly or not really?
Yeah, we can see it.
But it's not in presentation mode, right? You cannot see it.
No, it's not.
Oh wait, hold on.
Yeah.
I think I have to share the screen instead. Sorry about that. So maybe just full. Let me know. I think it should be okay now.
Perfect.
Yeah, but anyways, welcome everyone. We're
hearing some echo. Crystal, if you want to mute your tablet.
It should be muted. It is muted, actually.
Yeah,
okay, no
now
worries.
we can hear you.
I'm
So without echo.
Okay. Is it better now?
Yeah, perfect.
Okay, yeah, I was saying that welcome everyone. Today we're going to talk about some really critical topic I consider for African entrepreneurs, which is the financial or financing opportunities, financial options that you have in the continent, and specifically for startups and SMEs, and how you can position yourself better to actually achieve these opportunities and have success with your businesses. I'm not going to keep using too much slides throughout our session. I would like it to be more interactive. So please go. I'm going to remove the slides soon so I can see you in the chat. And please raise your hands whenever you have a question, you have a comment, something you want to share, or just type it into the chat, okay? So for that, I want to ask you to please type two things in the same message of the chat. So one is, what is your most difficult or most pressing challenge at the moment in financing for your business? And the second one is where your business is based, so I can get a sense of the audience. If you can please type it in the chat, I will have a look. Finance growth stage. Yeah, so where are you guys based, each of you? If you can put it in the chat, that would be nice. And yes, to your question, is it session only focusing financing opportunities in Africa? I'll say yes and no, because these are the financial opportunities are all over the world, are the same. You know, it's angel investors, it's the private sector with venture capital, banks, grants, and so on. So it's still applicable in terms of the general consensus or the like the concept. But I'm going to focus on the examples in the African continent. So it's still useful if you are not located in Africa. But if you want a specific examples, then let me know where you're based, and I will also try to include them throughout the presentation, any examples, okay? So I see Ghana, Spain, Ghana, Zambia, Spain. Yeah, don't forget to also include what is the most pressing challenge that you're facing right now in terms of securing financing for your business. It could be maybe you're having low sales, or you don't have access to loans in the bank, or you don't know venture capital firms. Whatever it is, please just type it in. Finding a team. Yeah, that's an important one, finding the team as well. Okay, that's good. Thank you for sharing. I think we can continue, and you can keep typing as we move on, and it's okay. I will check it. So I would like to start by introducing myself, just so you know who you're talking to. So my name is Crystal. I'm Crystal Bendahan, and I have been in the startup ecosystem for more than 12 years. And I consider myself a ecosystem builder. I have worked at different areas of innovation and entrepreneurship landscape across the world. I was living in Namibia for 2 years almost, and I'm an operator that run an innovation advisor and an investor. So I have worked in high growth tech startups since 2011, and I was the first employee of a startup that then became a unicorn. So I have seen that hyper growth and all the difficult aspects of being in early stage and having to do too many things for one person at one or any given moment. And right now, I am the founder of Bendahan Ventures, and we are an ecosystem building agency, and we work with corporations, startups, institutions, public and private, and we support entrepreneurs also in different aspects of marketing, fundraising, and global expansion, go-to-market strategies, etc. So it's very much add-on or I would say kind of customized services that we offer to our partners and clients. So without further ado, let's start with the topic of the day. And I think I will stop sharing the screen. And again, please, let's make it as interactive as possible. I want to start giving you a little bit of an overview of the financing landscape of Africa at the moment as of late 2024, based on reports from the African Venture Capital Association and so on. And then we will dive into what are the traditional sources of financing and what are some more modern and alternative financing sources that you can leverage on. And also give you some tips to secure funding, how to prepare to secure funding. But please do not wait until the end of the session to make your questions. You can interrupt or you can type it in the chat. You can raise your hand, and let's have a conversation that is more useful, I think, that way. Okay, so I think I stopped sharing the screen, I hope, but now I can see you. So, okay, I promised you some key stats about what is the landscape as of late 2024. So at the end of the last year, what are the trends that we saw across the continent? And I want to tell you some key findings that were published early this month. So we have noticed that there has been a sharp decline in the venture capital funding. And if you don't know what venture capital funding is, don't worry, because we are gonna talk about it in more depth in a few minutes. But I wanted to share this insight because I think it's super important to know what's going on in the market. Okay. So sorry, in the content world, it's the same. So first of all, this sharp decline in VC funding meant that we saw in the last quarter of the year that only about half a billion, so 500 millions, were deployed in the continent across 108 deals, and that was kind of like something that really hit the growth stage of investment, so later stage businesses, because of course when you are having less money to deploy, you are going to maximize the returns of the investment, so you're gonna put it in more smaller deals. I see some photo of nature. I don't know. I don't know if it's mine or what, but it's a bit distracting. Are you guys seeing and hearing me okay? Can you let me know in the chat?
Yes, yes.
Yes, yes.
Yeah, we can hear you.
Okay, good. Great. I'm hearing some echo as well, so I don't know if someone doesn't have mute. Please mute yourself and then raise your hand, and I will be happy to give you the floor, and you can speak with us and ask questions. So I was saying that there was a sharp decline in VC funding, and that was more for the later stage businesses, but then also we saw that the best performing markets in the region are the North African countries. So they were the ones that managed to raise more money, and about 400 million US dollars that they raised in the last year. And it was championed by Egypt. And the sector that actually got more financing in the North African countries was fintech. But also we saw that the trends, other sectors that got attraction from investment were AI. Of course, it's a global trend. Everyone that is working with AI is well positioned to have some fundings, or at least a lot of customers' attention and sales. But also, which is something that personally makes me happy, is that clean tech also attracted a lot of funding. So in total, these two sectors, they accounted for 13% of the total VC funding, and the rest, of course, it's spread out across all different sectors like e-commerce, fintech, impact, etc., fast consumer goods, beauty, you name it. Also mobility. But these were the sectors that were really championing the focus of the investors. And then also we saw the rise of venture debt, and we are going to talk about what is venture debt later on. But this is important because the private sector is actually I would say foreign private sector is actually looking into Africa. And we noticed that when we see that JP Morgan and big corporations like JP Morgan, the MasterCard Foundation, you have Total Energies, Enel, that is also a big energy company from Italy, but they operate globally. They are going and moving and starting operations all over the continent in Africa. Not only because they are interested in developing green hydrogen, but also because they see that there is an increasing economic appeal of the continent that is evident, and that's where they are confident that these investments are going to grow. So that's those are good positive signs, and I think that is going to affect what we're going to see this year in 2025. And it's important for you to know all these different things, because when you're studying what are your different financing options, you have to make sure that you understand what's going on, not only in your localities and you know what's going on in the microeconomy, but also in the macroeconomic landscape, because a lot of foreign investors are probably going to be your low-hanging fruits, so to say. Sometimes it's easier to get money from foreign investors over your local investors. Okay, so we're gonna talk about it deeper in a few minutes, but I want to ask if anyone has this experience, has faced this experience or something like this, that it has been easier for you to raise money from foreigners than from your local community. Can you share in the chat, please? I don't know if that's a yes, Ibrahim and William, for my question. Yes. Yeah. We will talk about why is that in a minute, I think. No, John says no. Okay, that's good. It's lucky for you. Okay. So it's kind of 50-50. Some say yes, it's easier to raise money from foreigners, and others say no, it's really not easier. It's easier to do it locally. And then we have Philip, that is bootstrapping. So Matt, congratulations to you. That's the cheapest capital you can get, is to rely on your sales, and that's called bootstrapping. When you're not asking for anyone else's money, no loans, not anything, is your own resources, and mostly these resources are coming back to you from your sales. So congratulations to you, because that's the best thing an entrepreneur can do, but it's not possible for everybody. So, okay, I'm gonna move quickly to the different types of financing, so we can really dive into the topic of today. But I also wanted to make a comment about what are the Startups Acts. So can you tell me, also in the chat with a yes or no, if your country, have you heard if your country has a Startup Act?
Can you come up again?
John, did you want to say something? Yes, Spain does have. Sorry, chat is jumping up and down. So the WeStart program. Yes, so basically the Startup Acts are some, let's say, some legal instruments that are aimed to create like more startups. They are aimed to foster the ecosystem and the development of the startups, but not only, I mean, it's Startup Act, but also applies to MSMEs in general. And what they're doing is to take into account that there are particular needs for each of these businesses. So even when they have SME Act, we can all agree that startups and SMEs, they overlap at some point, but they're completely different businesses. So you can run, every startup is an SME, but not every SME is a startup. So for example, if you are a small business and you are doing designer t-shirts, and you have a website that you have designed yourself and you polish yourself, you maintain it yourself, and you're selling this designer t-shirts that it's you or someone that you know that designs them, you are an SME, but you are not a startup, even though your t-shirts are unique in design and that you're using a website or an e-commerce to sell them. That doesn't make you a startup. So the definition of a startup is that you have to have a business model that is yet to be proven. So you have a hypothesis that you are proving, and it's focused on hyper growth. You believe that this solution of yours is going to scale rapidly and massively it can move to other markets, and it will have a lot of traction. You will have a lot of users and interest from the market, and also you're going to grow super fast. And then you can, mostly the ideal life cycle of the startup, it's around 5 years. So between 3 to 5 years, you are going to sell it. That's typically a startup. But an SME is more like consistent in time. So your growth is a little bit slower. It could be fast as well, but typically it's a bit more slower. Also, you have a business model that is already proven. So you know, like the example that I gave about the e-commerce for t-shirts, for designing t-shirts, that's a proven model because you are having a margin on each of the t-shirts, and you multiply it by the number of t-shirts that you sell, and that is your income. Whereas with a startup, you have different revenue lines that sometimes come from your intangibles, and that's why you are proving what is your business model, because it's a lot of what ifs, and what could happen. So in this startup acts, they are often designed through like participatory processes, and they involve collaboration with different stakeholders in the ecosystem. For example, of course, you have the policymakers, you have lawyers, but you also have the entrepreneurs, you have maybe people that are running accelerators. So maybe, you know, we could have like Mentor Day could be part of these processes of drafting the Startup Act. And they're basically some type of specific law that allows some flexibility in the legal framework for the startups to operate. So I was asking why, I was asking if you have heard that your country has this, because they started in Africa, they were first adopted or implemented by Tunisia and Senegal, and this was in 2018. 2018, 2019, and then since then, at least around 20 countries have actually adopted or are in the process of adopting one. So there are about 5 countries that have already adopted the Startup Act, including South Africa, that I know of. And then those are really important because, as I mentioned, the traditional channels for regulatory frameworks and also for financing are not always applicable to startups. And that brings me to one of the first traditional financial options, which is the bank, as everybody knows. So what is the role of the bank in helping startups and SMEs in general succeed? Well, basically what they're doing is that they are providing some loans, some credit. So basically they give you some capital, they tell you what is the interest rate, you agree upon that interest rate, and you agree upon a repayment period and maybe some repayment program. Sometimes you can start on, sometimes they give you like a grace period and you start paying maybe 1 year after you get the loan. Sometimes you immediately start paying. Like, it really depends on the characteristics, yes, of the loan and of course of the bank. And why is it important is to have both the bank giving you loans and also to have SME acts and startup acts in general, is because SMEs, and again that includes the startups, contribute to around 90% of businesses in Africa. So that's a huge number. That's basically what is moving the economy in the continent. But not everyone has the collateral or the credit score to really apply for those loans. So NEIP. Yeah, I'm gonna get to that. So not everyone has the collateral or the credit score to apply and successfully get a loan from the bank. So sometimes you are better off going through something called the microfinance institutions. So these microfinance institutions, they cater to underserved entrepreneurs, so specifically in rural areas, and they use the smaller accessible loans. Sometimes you have like these cooperatives, like in Namibia, like I'm telling you, in the rural areas. So each kind of community, they had a person that was managing everyone's money, and everyone was putting a little bit every month into this. And then because collectively that makes a lump sum, then they could go and negotiate with a financial institution or development bank or a trust or a foundation even, and then they can earn some interest from those really small savings that they were having. But to give you an example, I don't have one from Ghana specifically, but in Nigeria, that the microfinance institution is the Access Bank, and what they do is they provide loans to SME, and they have some competitive or specific terms for the SME. And in Kenya, it's called the Equity Bank, and they also are not only financing startups, but they're also financing rural projects. So how do you go about how do you go about these microfinance institutions to get funding from them? It's similar in a way to the banks. So it's very important for you to build a very strong relationship with this bank or this institution. Really show or demonstrate that you can have a consistent cash flow. So you can have a consistent income, and that can improve your chances. So if you can show them that, okay, I'm having this small business and I'm going to have this consistent cash flow, it shows there is traction, what we like to call traction, which is the interest, yes, of the market and the people who's buying your solution or paying for your solution. Then they're going to be more confident in giving you the loan, because they don't want to give money and then lose it, or that you don't have a collateral asset, so they cannot make an embargo of your house or your cargo, anything that you your car that you used as a collateral, because then they will never get the money. They will just lose it, and they also is not the bank Ethereum money, right? It's like the bank from the people that are saving money in the bank, or is the money from the investors in the bank that are giving the money to earn some interest, or to earn something back. So when you're talking to them, if your idea is really groundbreaking, if it's too innovative, leveraging some new technology, like for example, your business is AI based, or it has blockchain on it, or something like that, you really need to nail your presentation, your business case, your application for the loan, so they can really understand what is the problem that you're solving and why it matters, because people want to support other people that are doing impactful things, right? But if you just start kind of talking about the technology and they don't understand, that really creates a disconnection, and they're going to not care about your business or your solution. They're just going to be like, no, we're not giving you this loan or this grant, and that's it. So instead of focusing on the problem, instead of focusing on the technology, what you should do is focus more on the problem and what is the market opportunity, so you can show them that you can get some empathy from them. They can understand why it's important, and then they are more willing to support you. If your documents are too technical here, then the reader, as I said, in the bank is not really going to understand it, and then what do you think will happen? Right? Like you're not gonna get your funding. I'm reading your comments, guys. Okay. Then with the similar to microfinancing institutions, you also can have what is called some government grants, some programs that are government supported or government initiated. For example, there are some governments across Africa that they really want entrepreneurs to succeed, because they are understanding that the entrepreneurs are creating new jobs, and then that's of course good for society and good for the economy. So they are often offering some really favorable terms, like low interest and sometimes no interest. So someone asks, okay, if it's to only focus on Africa, what we have in Europe with like ENISA, so you have some like participatory loans that they have these favorable terms that, okay, if you don't succeed, then we like forgive you and you don't have to repay the loan, but if you succeed, then you pay like a higher interest, because then you have zero risk, things like that. But grants, it's kind of like a gift. You don't have to repay it. It's not a loan. So it's something that you have to comply, of course, with the specific requirements. But some governments do, and especially like development banks, they like to offer grants for young entrepreneurs. And that doesn't mean young in age, as you have to be below a certain age to apply for it, but more about the nobility. So if you are a new entrepreneur, if your company is less than 3 years, for example, so like new creation businesses, they really want to support, because they know that those early stages, you have like what it's called the death valley. So you really, what they're trying to do is to help you pass the death valley, survive the death valley. So they know that at the beginning, of course, you need money to hire other people, and money to invest in R&D and develop your solution, develop your product. Of course, those is investment that you need as in the form of cash. So they are supporting, and a lot of them you don't have to pay back. So, for example, in Kenya and in South Africa, there are some initiatives like this that support the medium to small and medium-sized enterprises, and also non-profit organizations. So, for example, there is the Kenya Industrial Transformation Program. They are really supporting anything that has like a technical arm. So if you are a tech startup, you can apply for their funding, but also they will give you technical assistance in specific sectors, because they want to promote very technical sectors. So in South Africa, it will be in the hands of the Department of Trade, Industry and Competition, that you can go and ask them for the grants. So they have, I think it's throughout the year, they have a specific dates where you can apply. But of course, they're very comprehensive of what you need to provide, and here let's say how you will pose yourself to get that grant is to really follow through the documentations that they are asking. Okay, so what is some examples maybe I can give you of these grants is from the Youth Enterprise Development Fund in Kenya. So they offer low interest loans for young entrepreneurs. So again, it's not a grant, it's not for free, you have to pay it back, but it has a very low interest. So it's very good for the entrepreneurs, because the risk is very low. And then in Nigeria, for example, there is the Bank of the Industry SME Fund, and they have a specific financing tailored to small businesses. And here, really, what I will say is that if you tap into these government resources, these government initiatives, you can gain not only financial support, but also access some valuable networks and expertise. And of course, it depends on the fund, the firm that or the institution that you are approaching. But in general terms, because they are promoted or championed by development banks, and their goal, as the name says, is development, in this case of the ecosystem. So they want to provide more support besides just capital, just cash to your business. So they will connect you with really interesting people from your sector and from the other networks that want to support also your initiative. So those are really strategic ways as well to get more connected. And then, as I was saying, that these programs can be very bureaucratic. So they will ask you for a lot of documentation, sometimes like really crazy documentation. When I was in Namibia, the bank was asking you for a business, like even to form your company. So you wanted to say, okay, I'm going to inscribe myself. I have this idea, and I'm going to now put a company because I want to hire a team, and I want to, have everything that all the admin and all the legal aspects in place, so I can really be an entrepreneur, officially be an entrepreneur, hire a team, and start working on the idea, then have my IP protection, and so on, and of course, raise money from investors. So the very first thing that we'll ask you, even before the name of the company, is that you need to provide them with a very extensive business plan. So when you read it, you're like, okay, I don't know, I just have an idea, like, how can I provide you with how much money I'm getting and whatnot, if I'm just exploring it. But then when you talk to them, actually, it was much more simpler what they were asking for than what it was saying in their documents. So again, it's still important to form a personal connection with a person whenever possible in these institutions, but you also have to ensure that the business plan and all the documentation is clear. It's I wouldn't say in this case concise, because unlike the bank, here your success rate will improve actually if you provide long, detailed, and sometimes very flamboyant applications. At least in Europe, this is the the truth. That if you give really nice, using all these flamboyant words, documentation, then the how you say funcionario, like the person in charge of reading the documentation, they will think, okay, yeah, this sounds super smart. They're using all these buzzwords, so it must be innovative, and it must be important. So yeah, the civil servants. Thank you, Antonio. Not with of course, not with every institution or every organization is the same, but typically in the public sector, if you use a lot of the lingo that you are reading in the call for request or the the applications requirements for the grants or whatever initiative it is, whatever instrument that you are applying for, then your chances of succeeding are very high, because what they are looking is to they have some metrics, and that's what they want to promote. So then you really have to understand what are those metrics that are important to them. And I'm not saying lie, but package your messaging in your application and package your solution towards those metrics. So basically make it super clear how you are really achieving those metrics. For example, it can be that your firm has to be super innovative. So you have to then explain how you are innovating, if it's in the process, if it is with the solution itself. Like nobody has done this, if it's a sector where you're applying an innovating approach of something that has been used in another sector successfully but never tried in your sector, and now you're bringing it as a solution. That's innovative. That you have to, if innovation for them is the important metric, you have to really highlight it, how you are innovative. If for another example, if what it's important for them is groundbreaking technology, then you need to say, okay, we're using, and I'm not saying lie, I'm saying you have to explain it. Yeah, we're using groundbreaking technology, like we're using AI, we're using blockchain, we're using whatever it is. You have to explain it, and then put a priority on making it clear and explaining it very well how you are using that. What else I can say about this? Yeah, basically, once you really understand what is important for them, you have to tailor your message and your application to your audience. Some example that I can share is a young agribusiness entrepreneur from Ghana, since you are a lot from Ghana. They ask the Tony, what's the name? The Tony Elumelu Foundation. They apply and they got $5,000 in seed capital from this foundation, and it helped them expand the production of. They wanted to expand production and create local jobs. So for the foundation, this job creation was really important. It is a metric that aligns with their mission, which is developing the continent. And then the lesson here is that if you apply for targeted grants, mentorship programs that are empowering business in your stage, and they help you not only with funding but also with connections, with skills, with support, then it's good for you to know. So always look for different types of not only development banks, but also what are other countries doing. Development finance institutions, for example, they have huge budgets for impactful projects, and then they define impact in very, I will say, wide or broadened ways. So it could be, one important one is, of course, job creation, but also economic growth. Then they also have like gender equality, and it really depends, education. So there are different metrics that are important for them. And this, you can look, for example, at websites of the local embassy from the United States, Germany, Finland, and then typically like the European Union, that they have these specific programs, these specific grants. So I recommend you to talk to the embassies, because they are the ones that promote these specific grants as well. For example, the African Development Bank, they have an instrument to support SMEs. It's called the Africa SME Program. And of course, startups, as I mentioned, fall into that category. And then there is also Growth-in, and they provide, this is more later stage, so it's growth finance and business support for SMEs. So not just when you're starting, but when you have some tractions. I see I have some questions. Here are the grants like this in Spain and the EU. There are grants as well in Spain and in the EU. So that's typically from the European Union. So there used to be the Horizon 2020. Now I think it's the funds Next Generation. So I am not sure. I think you still have to repay them, so it's not like free grant, but they are sector focused. So they have cultural solutions, or they have some for education. Yes, and they are all for startups. Yes. Yeah, tech startups, but they have like vertical focuses. Yeah. You can unmute yourself if you want, don't be shy. Because I feel like a monologue. I'm speaking just myself. So it's very funny. Grant opportunities in Ghana. Yes, of course. Then you have, it's not only for Ghana. There is the Tony Elumelu Foundation. I can type it here. Elumelu Foundation. So they are operating all over Africa. It's a foundation that they operate all over Africa, and they have different initiatives. So check it out, because they do support. Lately, they support startups. They weren't created to support startups, but lately they are supporting many startups. I have heard. And then Growth-in and the African Development Bank. So Growth-in. The African Development. I'm putting it in the chats for you guys to see how it's written or spelled. So, for example, the African Development Bank, they supported a startup from Tanzania that they are focused on the renewable energy sector, and the startup secured $250,000 from this bank to scale a solar kit distribution to an off-grid households. And they managed to get this because they were developing rural areas, and they were bringing these, solutions of electricity based on solar energy to rural areas where typically it was really a hassle and very expensive to get electricity. Okay.
And Cristel, you mentioned that they are vertical. You mentioned some. What does that mean? That they are.
Yes, so for the funds, like the funds in the EU, they have a specific mandate. So let's say that, okay, the EU is committing 5 billion euros for the next 3 years to support startups. Okay, I don't recall the numbers exactly, but it's just a theoretical example. So let's say they're given 5 billion. So from 5 billion, they say, okay, 1 billion is going to go to EdTech, and then the other 2 billion is going to go for impact startups that they have to be aligned with the SDG goals. So then everything that there are 50 SDG goals. So anything that you can somehow relate and connect, like even if it's not evident, if you can argue and argument that it is aligned with these specific goals, then you may get this. I mean, you of course can apply. Then they will say yes or no. But what I meant with vertical is that they have a mandate on a sectoral focus. So I know that the new funds, they have focuses on there is cultural, there is deep tech, and I know there is some for education. I know there are more, but these three, I'm sure that they have a specific mandates for a specific like shares, let's say, of the big funding that they are using.
And when you apply to this, you have to apply directly to the EU, or do you apply in Spain or in every specific country, or no idea? I will have to do some research on this.
It's typically done through agencies, just because documentation is crazy. But I think so. You know how it works, right? Like they have in the EU, like the institution is like the EU, but then they have like local representatives that are like promoting or like the ambassadors for the program. But typically, if you apply yourself, there is like a website where you can do it, and they tell you, okay, send your applications here. Sometimes they even ask you like a postal mail. You have to mail everything in different envelopes. Like it's really crazy like that. Like we should be more digitalized. That's not always the case. But that's why a lot of people, they say, I just go through an agency, and then I always recommend to go through an agency that has a very good success rate, but also they only charge you when over the success, because otherwise it's a business. It's like a gestoria business, so intermediary business, and then they will just get your money to do some excuse the language, but half-ass application, and they just get the money and get lost, So it's better to go with the ones that have shown those success from other countries, other companies.
And now that I am speaking, earlier you mentioned something about, well, I don't know if you want to continue with some topic, but you mentioned something about how challenging it was for a unicorn. I don't know, that loads of challenges appear, and just in case, I want
that lots of what? Sorry.
That you mentioned that how challenging it was for a unicorn to grow, how the fast growth made things much more difficult. And I just wanted to ask if you could expand a little bit on what are the challenges that you encounter, just in case one day I find myself in that problem.
Yeah, well, I don't recall what exactly I was mentioning to like tie it to the conversation, but I can, I was in the early stage, so it's different. What I always tell the entrepreneurs is that there is no shame in, either way, either path that you choose. If you want to be a startup and, go like the unproven way, or beat the unbeaten path and create your own path, that's completely admirable, and it's completely okay. And also, if you want to go the other way and have like a more steady, sustained, I would say, growth, and go slower, and then maybe create a legacy for 3 generations to come, and create a mid-sized business and stay like that, but it will stay in your family, and create some jobs for maybe 400 other families. That's also very admirable, and it's fantastic. It's just a matter that at the beginning of your business, your vision, of course, it can change, but you have to be very clear on what you want to achieve from day one. If you want to become a unicorn, or you want to become a family office, or like a family company that's, in 3 generations, it will still be in your family. It's a different path. And why is it important that at this point, I don't know all your stages, guys. I know you're at different stages of your businesses, but if you can decide that from the moment you say, I'm going to be an entrepreneur and I'm going to develop this venture, it's super important, because if you go through, and we're going to talk about this in a minute, if you go through the venture capital path, or like the private investors path, this is an important question that you need to ask yourself. You cannot go and say, okay, my goal is to be a family company, and like Telefonica, 100 years from now, it's still going to exist. We're still going to be, doesn't matter the size, small, bigger, super huge, doesn't matter. But do you want to be an established, steady company, or do you want to just like grow crazy and maybe disappear in 5 years? So if you want to be 100 years company, venture capital is not your friend, okay? Because they want to have the returns in less than 10 years, and they want to maximize their returns. So they want you to give them back at least 10x what they have given you. So it's the most expensive, contrary to what people think, it is the most expensive source of funding for any entrepreneur ever, literally ever. The cheapest, and that's why I was saying, I think it was Philip that said that he is bootstrapping. I said, this is the best thing you can do, because you only are responding to yourself, to your vision, and to your ideas, to your desires, and then to the market, actually, because the sales that you're getting, it's allowing you to, okay, now I can pivot. I know what my customer is having, and then you can go grow with your customer, grow with your market, grow with your traction, with the demand. So that's what I was saying, that it could be challenging in one way. If you want to become a unicorn, it can be very challenging, of course, to first get the funding, which is the topic that we are speaking now. But once you get the funding, even if you had it easy or you got a lot of money, at the beginning of the conversation, it is in your best interest, contrary to public opinion, it is in your best interest to have a lower valuation, because you're setting expectations. So if you have a lower valuation and they have like a bigger share, then it's easier for them to be diluted with a much higher valuation than if you are having a super huge valuation now, they have a big stake of your company, and then you have to wait a few rounds to actually get to that valuation. Or it could, now your valuation is lower. So what is the market going to think about you if you started with a 1 billion valuation? So now you are a unicorn, and then you fell through. You're no longer a unicorn. It's like the market is going to say, this is a failing business. And it may not be. It may be a very thriving business, but actually the expectations were very misleading from the beginning. So there are a lot of factors. And also I have seen, and I can share an example from Spain. Where was the name? Spotahome. They raise a lot of money from venture capital. So Spotahome, for those of you that may not know, Spotahome, it was, or it is, it still exists. It's a platform where online you can rent a room or an apartment without ever having to visit it. And it works with people that are trusted spotters. So they go, they take the videos, they have, they created a standard for people to go visit the properties, and they create these profiles on the platform. So you, as a foreigner, when you're an exchange student, maybe like in Spain, there are a lot of exchange students, they come, they don't have time to go and visit all these places. You just go online, you book the place that you like, and then there is some, I have been told that is not really like that in the reality, but in theory, you have like a grace period, like protection period, that if you go, you move in, you don't like it, like whatever, it was not really what you expected, then you can talk to their team at Spotahome, and they will change you to another one. I mean, of course, it works with add-up price, like any agency will do, but it's digital. So that was their very innovative approach. It was the first that I ever heard that was doing something like this. So they raise money from venture capital, from the Silicon Valley VCs. A lot of money they raise. And then, of course, these investors are pushing for them to grow, because that's what you are actually offering when you are raising your Series A. You are saying, I need the money to expand like crazy, like this money. This model is working well in Spain, now it has to work well all over Europe, and then also the US, and then Latin America, and like we're taking over the world. This is what you're selling as a startup. So they raise the money, and they started growing like crazy. But this is something that always with the entrepreneurs that I mentor, I tell them, hold on. You need to really see if your processes are working correctly. Like everything in your company before you start growing like crazy has to work. And if it's not working, at least you need to know what is like the lean model that is making it work. What is your secret sauce? What is something you cannot live without that you need to replicate? Because of course, every city is different. Like I'm not even telling every country, but every city in a lot of businesses, every city is completely different. Yes, so it has particularities. So you really need to know what's your operating model as lean, that it's making your business, like your venture, your solution, and the rest is add-ons that they will change with the market, or it will change depending on like culture, things that are you can maybe live without. What they did is that they didn't have this thought process at the beginning. They started growing, and then they were copy-pasting the model from Spain, from Madrid, to other cities. And the other cities, of course, they're different cities because maybe the behavior of the consumers is different, or maybe the legal framework is different. So the prices, there are many aspects, and you have to really understand those aspects before you're growing. If you just copy paste the model and think that this is perfect, it works here, it's going to work everywhere, it's a mistake. So when you have not figured out what are the issues you're having, and I'm going to give the floor to all of you, I know you guys are waiting in a minute, is if you're not really solving a problem, at least knowing what is the problem, and you replicate it by 10, you no longer have one problem. Now you have 10 problems or 20 problems, or as many times that you replicate it. So it's better to sometimes take a little bit of time, step back, reflect, understand how you're going to do things, think strategically, plan, and then you grow. But this almost broke Spotahome. They had to actually fire a lot of people because they were hiring like crazy, trying to replicate the model, and they didn't. And it's not only Spotahome, but because I know you know Spotahome, I wanted to give an idea. So maybe those are some points. But yeah. Sure. I don't know if it was Francis or William first that you have raised your hands, and then in the end, Marcos. I know. So maybe Francis, you want to go first?
Thank you very much. I've raised my hand for a very long time.
Sorry, I
So
didn't know.
I have a pile of questions from the beginning. So I will
No
start
problem.
from.
Go ahead. It doesn't matter. I'm so sorry I didn't see you because I was focused on the chat.
Okay. So during your introduction part, you said there's a decline in VC funding. From which side? Is it those who are the funders are not taking the venture capital funding, or the financiers are not giving the funding to the funders? And you said North Africa is receiving more VCs. What are the factors that are accounting for that? And my third question is, how do we locate foreign financiers? You said there are a lot of foreign financiers. It's true. I gave you asked us whether we have them. They are available, but they are not accessible. Sometimes you hear in the news or in the print media, or they are giving entrepreneurs funding, but you look at the amount, $1 million. They quote big amount. That's, for example, in Ghana and in Africa, the entrepreneurs here or the startups here sometimes do not have the capacities and the documentations to match the amount the foreign financiers give. So sometimes the monies are available, but you cannot, because of the requirements, you cannot get. So can you help us locate some of can you help us so that we can locate some of the foreign financiers in Africa and specifically in Ghana? And my last but one question is, if I have a large business, it's an environmental business, can I get impact funding or maybe an angel investor to support, whereby I don't have much investment in it? Why I'm asking so is, most investors want you to invest something before they bring their investment. Are there investors who can invest almost 100% in a business? Thank you.
Okay, thank you for your questions. There were quite a few, so I hope I remember them all to answer them. So the first one, you asked about why there is a decline in investment, why there was a decline over the last 2 quarters of last year. Yes, it's because, so what it means is that the investors are deploying or are giving less capital than they were given in the previous quarters. So at the end of the year, so maybe they were giving money like this, and at the end of the year, it declined. And what the association, so it's the African Venture Capital Association, AFCA, what they saw in their research is that the funding was going more commonly to North African countries. Now, they didn't really delve into why is this, but I can maybe make a speculation that because the Northern African countries have had more, and I don't know, Francis, if you're still there. I hope you're still there because your image is frozen. But because of this ecosystem have more in history, that's why they're attracting more venture capital firms. What does it mean? For example, I was living in Namibia. In Namibia, up to this day, there's still no venture capital firm. Also in Botswana, in a lot of Southern African countries, there are no venture capital firms. Now, there are angel investors, but even when you talk to these angel investors, and I will say angel investors like this, because an angel investor is a person, typically a high net worth individual or someone middle class worker that has some money. I'm not saying small or big, but some money to spare and to give back to their community. So they want to support entrepreneurs. And if it's too small, it doesn't matter. It's still important. It's still a good contribution because you can then partner with other angel investors, and then your money is becoming more sustainable. Yeah. So it's actually showing, it's if I will take my $10 with your $10 and then 10 other friends, then suddenly I have 100, so you can understand what is the metric here. And there is a huge global trend on having like investors clubs or crowdfunding clubs, or it has different names, but at the end of the day, it's some people that have some spare money, even if it's just pocket money, they come together and they want to support entrepreneurs. So there are different structures, different ways to do it, but they are basically coming up together and joining their sources. Also, the best angel investors, they are people that have a lot of industry experience, maybe some people that are retired and they want to use their time and their expertise to really support other people, like the new age of businessmen and businesswomen. Let's not go into that language barrier. But anyways, so what they're doing is that they want to give back. This is their main objective. So what I have seen is that there is, for emerging markets, there is now a diaspora that is somewhere else. So they are in Europe or they are in the US, and they know that back home in Africa, in certain areas, with much less money than what they will need to give an entrepreneur in the US or in Europe, they can give it to the African entrepreneur and they will have much more impact. Okay, because the costs are different. So with less money, maybe in Africa, you can make much more things that you could do in Europe or in Africa. So those are the type of foreigners that you should look for first. Yeah, so try to find those people, like maybe some Ghanese that is living abroad and they have expertise in your particular sector. So you can approach them on LinkedIn, like you can do some research and then find them maybe on LinkedIn and, talk to them and say, okay, I want your expertise because I know you have worked in this, and this is what my solution. So I want your expertise. And first you approach it really interested in their knowledge and what they have seen somewhere else. So then you can combine with your local experience, and then you can, just kind of brainstorm of how your solution will go best. Naturally, what will happen is that they say, okay, how much money you are requiring? And they will think, okay, this for me really is pocket money. I can afford that. So I believe in you and I want to support you. And that's how a lot of entrepreneurs are now finding their foreign angel investors, is through that like local connection, so someone from the diaspora. And nowadays I need to find the names because now it just slipped from my mind, but there are some crowdfunding platforms all over Africa. There are many that are offering exactly this, bringing some money from the diaspora into the local markets. So you are, of course, they apply and they have a process. They will vet your business, and then you go on the platform and you can opt for funding there. Of course, there is a commission fee, but that's all over the world. That's how crowdfunding platforms work. They take a commission of the funds raised, of the total round, and also a commission of the ones that they manage to attract for you. But those are some ways to get it. Then you asked me, I don't remember a second, but the last question was about you're having a climate solution. Yes?
Yes, can I get a big funding for a big project where I don't have much investment in it? Let's say I'm looking for $200,000, $200 million, but looking at
200 million or 200,000, it's different.
$200 million.
Oh, okay.
And let's say I've not even invested $1,000 fiscal when it comes to the monetary aspect, but maybe management, other resources, I've put them together. But when it comes to fiscal cash, I've not invested my maybe just less than 10%. Can I get that funding?
But is this your real case? You're looking for $200 million investment?
That is a real case. I'm going to plant 5 million coconut plantation, but I have the land already.
But why do you need 200 million US dollars?
Yes.
Yeah, yes, please say. Okay, let's break it down. Okay, why you need 200 million?
So every tree is going for $50.
Yes.
Coconut use 3 years to fruit. So from the preparation of the land, it starts fruiting for the 3 years. I'll spend $50 on each tree, and I'm planting 5 million.
Okay, but I think you need to start smaller. Okay,
Definitely.
You need to start smaller. You cannot ask for the 5 million trees now to fund. You need to show. You need to show
So I'm planting within 5 years.
I mean, it's good. Yeah, I see here some comments. Dream big. We are in need of that too. It's just the reality is this: 200 million. There are funds much smaller than that in Africa, but also in Europe. Like the funds are not that big, So if the fund is not that big, they cannot give it to you because they have to at least have 20 investments, at the very least, and that's like a but fund that is not doing their metrics correctly. But the funds, basically how they work is not like some ethereal money coming from the sky, that's some investors are having, or maybe they're super rich and they put it. It's not how venture capital works. So venture capital firms actually raise money from other investors, which are called the LPs. So what happened is that these LPs are either a family office or a big corporation, sometimes pension funds, and so on. And they have to get the money. So the venture capitalists, they have to raise the money from these investors themselves with a thesis, with a mandate. So that's why not every single venture capital firm that you talk to, it's going to be a match for you. And that's why I always tell, do your research. It's really not good that you are going to have a very nice message that it's perfectly crafted, and then you go on LinkedIn and send it to everybody, or you go and send emails to anyone that 5,000 people. Because when these people open and they see you are looking for 200 million US dollars, and their fund, it's 40 million or even 10 million only, they're going to say, I mean, I cannot even like I should work for you. I should not work at the fund because you know your investment, what you're asking is much bigger than my fund. So that's why you know because you don't have any track record and you don't have your own money. If you will say, okay, I need $200 million US, but I have 100 million, of course. Like I'm putting 100 million on my own and I need additional 200 million. It makes sense, but it's also not for venture capital. It's also not a startup. It will be more of a development project or private equity project because of the scale. I don't know if that makes sense, but you can definitely get some funding. There are also maybe even grants for your project, but of course you have to break it down. You have to start somewhere. So just, you know, take a smaller, much smaller and more manageable number for the beginning. I'm not saying you're not going to do it. Of course you're going to do it, but you cannot eat the elephant in one bite. It has to be many, many, many bites. You see? But there are funds actually nowadays. There are mandates for climate tech, but or climate, or you can find impact funds. I think an impact fund will be more suitable for your project than a venture capital fund, because as I said, venture capital funds, they want to have their return, so they will invest money, and in 5 years they want to already be seeing the fruits of the investment. And the tree takes 3 years in growing, so then it needs more development than the life cycle of the fund. So I don't think venture capital, like the traditional venture capital, is the best way for you. And yes, Janet is it's absolutely right. She's saying $200 million without evidence of viability and scalability of the project cannot attract investment. Exactly. That's why you have to prove. You start with 50 trees or 10 trees even. You start small and you prove that the model is working, how you're going to get money, how is it a good investment, how are they going to get 400, 500 million dollars at the very, very least. Like I'm saying, venture capital funds, they don't want you to pay back the money that they give you. They want you to pay much more than what you gave them. That's why they invest in a lot in businesses, because they know 9 out of 10 are going to fail, but they're hoping they're not.
Crystal, I just want to say we have 3 questions waiting to be replied for a bit
In
now.
the chat?
No, like we have three hand raised.
Yes, I know. The next, William was next, then Marcos, and then Kelvin.
Okay.
Yeah. So William, please go ahead.
Yeah, okay. So what I wanted to ask is that for most of the investment portfolios you mentioned, like the investment channels you mentioned, yeah, like similarly, we face that problem where you have to, I don't know, show some evidence of money you've already used or money you've gained. But in the situation where you're starting a business from scratch and it's still at the idea stage, which funding is more reasonable to go for? Is it seed funding or is it a grant? Or do you go for the capital ventures, as she said? And sometimes they ask you for some things you can't provide as a startup. So they ask you for some documentation, some proof of money you spent within the last 12 months, and some other things in order to get access to the fund. So ideally, which fund does a startup still at the idea stage wanting to start like some of its processes? Which funding is ideal to go in for?
Before I answer your question, can you share a bit more about your idea?
Yes, please. So I'm looking to make farming more easy in my part of the country, where now we have an influx of diaspora and people visiting Ghana, and they want to invest in farming. Most of these people don't know how to start farming, so we don't have like companies that can help you start farming. So what we are trying to do is make farming easy for even a beginner who wants to go into farming. We get you a fully, like we get the land. We equip it with all the equipment you need for farming. Then we manage the farming for you. So you're going to be you can rent the land we are giving you, or you can buy the land, and we can manage the farming for you. Even when you're in the country or outside the country, we give you real-time data, storage facilities, equipment you need in farming, the workforce. We manage the workforce, like people who work on the land, and whatever crop you want to grow, we manage that for you. We do the heavy lifting for you to enjoy the profit when we are done harvesting.
Yeah, oh, that sounds really nice. Yeah, so I think what we could do is, of course, you will have now map all your different numbers. So now you know how much will cost you to provide the equipment, how much it will cost you like to provide the training for the people and so on. So you know what is like the minimum investment someone that wants to start a farm needs to have, right? And it depending on different sizes, depending on different vegetables that they're going to grow and so on and so forth, right? So you can come with that, all those metrics and put it like a package and say, okay, so all of this package is for each farmer, and we are hoping to reach 50 farmers, for example, in this particular area. So what I think the best idea you could, like the best route, sorry, I was looking for the word. The best route you can go, it's in one hand trying to find what it's called the Family, Food and Friends, the FFF. It's typically the first stage of funding. So it's people in your network that trust you, people maybe you have worked for, or again, nowadays, which is modern financing, going into those platforms of like crowdfunding where you put all this idea and why it's important for the area. So I will really focus on the messaging on, you know, the area, rural area, maybe the unemployment rate super high or poverty rate, or, you know, some painting the picture of why if people go through the farming is going to better their lives and in how long it will better their lives. So you can create that story and maybe put it on a crowdfunding platform. And in parallel, I will look for these grants and specifically from development banks. And like I said, these like government backed initiatives, for example, GIZ from the Germans, they are all over Africa. They have offices all over Africa, and they do have a specific, they have a specific mandate for agriculture. The US, they have a very specific program for so typically what they do is that they are funding organizations that then will deploy funding for entrepreneurs like yourself. But you can still go through those websites and see, because these are public tenders. So even when they have already announced who won the tender, they will tell you who won it. So you can easily find the people who is actually making the decisions to give the grants locally. Yeah, so I will really go through that, and also impact funds. Impact investment funds, which is different, slightly different to venture capital. Venture capital is driven, of course, by capital gain, and then impact is more driven about they will take less capital gain if it will mean that they are in alignment with their particular development goals, like SDG goals, or you know, something that they have established in their vision as a fund. So I will go through those two. Try to make a really nice case in a crowdfunding platform that it's hopefully tailored also to like the diaspora or like international people, and also talk to those development banks, development institutions, and sometimes foundations like the I forgot the name, the one that I typed earlier, Tony Elumelu, and MasterCard Foundation. They are now having funds for Africa. But also, I will say there are some, they are not really venture capital funds. They operate more on like the frontier technology, as they call. But there are some financial options. I think it's called this one, Untap Global, for example, maybe one for you. I'm not sure if they are only focused on solutions that are heavily tech based, so like digital technology based. But if not, what they do is something as a business model. I really like it because what they do is that they get to understand you as an entrepreneur and what are you doing, how is your project, and what they do is it's kind of like, it's something in the middle. It's really like a new model, because it's not a loan from a bank. It's not really venture debt as a concept per se, but it's kind of like in the middle. So it's not completely a loan, not a venture capital, not entirely venture debt. It's something new. What they do is that they get to understand you. They believe in you. If they believe in you and they see that there are some healthy financials that could have potential, like what you're explaining to me, it sounds very feasible and it sounds very logical to me. Like, yes, you will give this seed money for to start the farm, and then you expect that in X years you're going to have the money back, and they're going to start paying maybe the year after, because they are already starting producing, and from that production they're going to start repaying the loan or the initial investment. So what they do is exactly that. They say, okay, now we know, we have the plan. They have like super experienced financial guys. They run the models and they tell you, okay, we're going to take a percentage of your sales, and also like you pay a base every month of like you're repaying the loan, but also there is a percentage of the sales that is shared, and that's how they make kind of like their, you know, their earnings, so they can finance other businesses too. And from the investor side, what they offer to the investor is kind of like a fixed credit. So they raise money quite easily because they only work with credited investors from the US, and they take their money for a fixed period of time. And then because of that fixed period of time, depending on if it's 12 months, 24 months, 36 months, or so on, they will give you a specific rate. So like your investment as an investor, it's secure. It's like you're putting it in the bank, but you know it's going to really good businesses in like underrepresented areas of Africa. So check them out. But yeah, definitely talk to like the embassies, like I talked to our fellow friend here, and the GIZ. Now, sorry, Jude, I think you are not muted. And I wanted to give the floor to Marcos because he's been waiting for a long time, and then to Kelvin. Marcos, go ahead, or answer already.
I was muted and I was speaking alone for myself. So I wanted to ask you, because one of the things that I face, let's say I'm scared of, is the moment that I'm going to ask for funds, and how I rate my company. I've been working already on the project for years. We have already several clients, even trying to close a deal with Mapfre and some other companies, and we started having some partnerships. However, the actual rate or valuation of the company, it's something that, and I don't know if it's kind of a challenge for me, and how much I can evaluate the software, the company, the amount invested, because it's not just the amount of hours that I dedicated, which have been extremely extensive, is the amount that I paid already for the employees that I've been having for this time. So at that moment, I was okay. I'm going to rate it with a higher amount, and I'm going to think, okay, I dedicated a lot of money, so the day that I'm going to request for money from an investor, I'm going to say it's higher, and I'm going to try to make the numbers match for a higher amount. But you said before, maybe it's better to have a lower rating of your company for the investor, and because then they are going to get a part, but it's going to be easier for them to exit afterwards. So then you just broke all my plans, and I'm a bit confused. I'm not sure first how you recommend us to evaluate our company, if there are some techniques or there's somewhere that we can access, I don't know, even a website or anything like this, some advices to evaluate our current plan and with all the efforts we have done. And yes, I don't know if you can give a bit more of detail on that moment of facing someone, and what are the consequences of a higher rate of ourselves with an investor.
Yes. Okay. So that's a really good question. Valuation, I think it's like the egg and the chicken question. It's like a never-ending question. There are a few methodologies on how to calculate your valuation. So if you search how to calculate your valuation, you will see there are so many different methodologies. Like one is like you take your beta and you apply a multiplier, and then that's it. And then the reality is that at the earlier stages, before Series B or maybe even before Series C, it's all like this. You know, it's like a finger on the wind. It's all lies, guys. It's really just all nice wishes that you have on paper, but really nobody can tell you this is really the valuation. So something really interesting I heard from a very well-established fund here in Spain recently is they say, actually, when an entrepreneur in the very early stage are coming to us and they're talking about startup valuations, we know that they are inexperienced. What they should be focusing on is, you're saying the exact same thing, but like twisting the phrase in a way, flipping the phrase in a way. Because if you're talking about, I am willing to give 10% of my company and I need to have 2 million, for example, or 1 million, because I know the wrong way. So rounds, how they are typically structured is that you're raising money enough to cover all the costs that you will have in the next 18 months, because that's 12 months is the minimum that it will take you to raise a new round. So this is the mindset of how funding runs work, is that people say, okay, I raised this round. For 6 months, I can be like, okay, it's fine. And then in 6 months, I need to start already preparing for the next round. And because it will take me 12 months typically to raise the funds, then I will have enough from one round to the other, and not to suffer, not have to close the business, not fire people, all these crazy things that could happen. Also, of course, depending on your business, what you should really the goal of these startups, the goal of a business is not to raise money. The goal of the startup is to get sales, to really have a solution, a product, a service that people want to pay for. This is the goal. So what you need to do, of course, is to really be open to the market, what the market is telling you, what your customers are telling you, where you should be pivoting or going to. But that's why, when you are giving all these predictions and modelings to your investor, is pretty much just a wishful thinking in the air, because you really don't know what could happen in 6 months from your market. Like maybe a competitor will come, completely disrupt what you're doing, and now you are irrelevant. So now either you have to cut your losses and say, what can we salvage from this business, or really make it and dominate one specific area, whether it is geographically or sectorial, to dominate it, so the competitor that is disrupting everything can maybe buy you because you are becoming super attractive to them, or, this kind of thing. So if you will go to the investor, back to the question, if you will go to investors and say, okay, I need 2 million, this is to cover my next 18 months, we are going to hire this, we need to develop this, blah, 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 all as is in your business case for them to in your fundraising deck, in your investor deck. You explain it very well, and you tell them, for this, we are willing to give 10% of our company. Then, of course, the evaluation is a matter of negotiation at the end of the day. So, of course, there is like a breaking point where you are not willing to go below that, because you are putting a price of course, all the investments that you have done. If you have, what are your CapEx, your OpEx, if you have any assets that you can account for, and then you can apply some multipliers that, again, are very much subjective to the technology you have developed. But, of course, if it's something, you can always push for high evaluations when there's something that is impossible to replicate by someone else. But if you're saying, oh, my startup is actually taking ChatGPT, creating an agent, and then, ChatGPT is doing it, anyone can replicate it. So the evaluation in this sense is like, okay, I'm going to make it lower, so you invest in me and not in the other person. And the money, again, I'm not making the money from the investor, I'm making the money from the sales. The investor's money is just to survive 18 months so I can get to the next level of my company. And that should be the aim. So at the end of the day, it's a kind of back and forth conversation. And what let me tell you a secret to everyone here. A lot of venture capitalists don't even know how to calculate these valuations. That's why, no, is this true? That's why they are not lead investors. They just follow on. So the lead investor, your anchor investor, is the one that is negotiating with you what is the valuation, and also depends on your cap table. Cap table is who is investing in your company, who has a share in your companies. Anyone that has a share from your company equity share, it's part of your cap table. And that is even much more important than the valuation, because if you are having a cap table, for example, some co-founder that is no longer in the company and is just there having a percentage of ownership, but it's not even, it doesn't have skin in the game because it's no longer in the company, but still has ownership. Some fund or some angel investor from dubious money, like some mafia money, or like a country that has, I'm from Venezuela, I can say this, like I have seen the case of hackers. So they took money, hackers and Japan Talent, they took money from people that stole the money from Venezuela. And when SoftBank was going to invest in Japan Talent, they say we want nothing to do with these people. So they bought the shares to clean the cap table. But what will happen is, this is SoftBank. They have a lot of money, and then it's his personal money, so he knows he does whatever he wants to do, right? But what in reality will happen in most of the cases is that in this case, when you say there is this dubious source of money, like it's not really legit, or we don't like where, how this person got the money, it's not in alignment with our values and so on, which is fair and I appreciate, they will just not invest in you. They will not care to clean, as they call it, your cap table. They will just not invest in you. And then you will find it difficult to find someone that wants to clean your cap table. There are a lot of factors more important than the exact number of the valuation, because at the end of the day, it's a back and forth. What is important is that you know how to put value on the things that you have created and the things that you have invested on and that you're bringing to the table. It can be experience from the sector, like no one knows tag my link. I don't know what you guys do exactly, but let's say that you are doing
digital business cards.
Yes, it's sent them. Okay. Yeah, so you can say, I was running the largest business card company in the world. So now I tell you what is, physical like business or something, business card. So, I know these markets very well. I have been in this market for 20 years. So I put, some expertise on this, and those are kind of things that you can negotiate upon, or like put some higher price on. But again, it will be more, even you're saying the exact same thing. If you talk the conversation about, I'm not willing to give more than X percentage, then they can tell you, okay, for that percentage, I will give you 2 million instead of 3. It's the same. You're changing the valuation, but the conversation might add up differently mathematically in your brain. So they know that you're experienced and that you are serious and not just making it up. Because at the end, you can ask for whatever. You can evaluate your company as 10 million, and I can evaluate it as 20, and then Emmanuel can evaluate it as 1 million. It's very subjective sometimes, So it's just a matter of really arguing and agreeing on, okay, this is what I'm bringing to the table. This has the right price, and also the market conditions. There are a lot of factors.
Many questions. In one of the articles that over the process that when we are preparing the plan, it was saying that if you are alone, so if you're alone and in your company you don't have all the partners, it's quite difficult to get an investor interested in you. And so I was a bit not sure on because otherwise it would be just you being the responsible for everything in your company and so on. So if you don't share the responsibility with some of the people that are giving value to the company, it's kind of more difficult for an investor to trust and someone to give the money. Did you feel that in your experience, or?
Do you mean like as co-founders having equity? Sorry, like
so
I'm not sure if I confused you with before when I said some co-founder that is no longer in the company. Like when you are not in the company, that's why you
No,
have
no.
vesting, so basically vesting is some clauses, legal clauses that you have before you give the ownership. Sorry, maybe rephrase the question or repeat it.
No, sorry. I'm referring to, for instance, in my case, I don't have other people or other partners that were here and they are not anymore doing anything, but they have a share. It's just myself with all the shares. So
Okay.
in case that I gone to an investor, what I was reading in one of the articles, it was, it's better if you found the company or you are with some of the partners that you are sharing the part of the company, and everyone has said on the company, or everyone is specialized on something, so you don't have the whole responsibility of the company. Like, this is more attractive to someone that is going to be investing in entrepreneur.
But this is a matter of team in general, but not on the yeah, I understand, like a sole proprietorship. Yeah. So actually many VCs now prefer solopreneurs, as we call, because there are a lot of studies that are showing that a lot of startups fail not because of the cash, not because of the solution that they didn't have a market, like the product market fit. It's not because of that. It is because of co-founders' problems. So when you are just yourself, it's better in that sense, because like of course you have a team, you need to have a team, and depends. Nowadays, again, with the AI, we are going to see the first unicorn that is a solopreneur, like literally no team, just one person team in the entire company. So this is something that doesn't really have to, it doesn't really change, it doesn't tilt the leverage to one side or the other. It's more about the fact of your team and the complementary skills. But you can always argue, not argue, but you can always, argue in the sense of giving the supporting evidence of why you have chosen that. So you can say, yeah, I'm lacking in, I cannot do everything, of course, technical, CTO, CMO, CEO, everything of just two people company, and the other two are interns. Like, no, you can make the case that, hey, I specialize, I'm really good in business, I'm really good in finance, or I'm really good in technical skill, and I'm hiring a CMO, or I am super good and I love developing products, but I don't want to be the one raising money. This is the time I'm doing it because it's just me, but I'm going to hire a CEO. I have already this person. I need to pay them 100,000 per year. And that's why I need this round, because I know if we get this person, we can also get all these partnerships, all this, make your case really well. So in a nutshell, not necessarily. Actually, it can be sometimes be an asset that you are the only owner, because it's easier to negotiate with one person and not five. Like sometimes it's worse to have 5 co-founders. That's like too much. They say 2, it's good, because if you get ill or whatever, like having a second person or also sharing the responsibility, and also because entrepreneurship is really, really a lonely journey, I find. So it's good to have someone else supporting you. But if you know that it's okay, you can do it, and you will form a good team to really support you and your business, then that's completely fine.
All right, thank you.
Of course, pleasure. Now sorry, who is next? Kelvin?
Yeah.
Perfect. Welcome.
Yeah, thank you. For my question, let's say you have a business, okay, and then with your business model, you have a targeted customer segment, okay. So let's say maybe your business or your product is going to be very needful to maybe an urban customer segment. You get where I'm coming from? And then let's say your current location, okay, does not have that kind of population. Like there is a low population in the country that makes up that urban segment. You get it? And then maybe you have other locations that have that high population making up your urban segment. Let's say in Ghana or maybe in Africa, looking at the urban segment, you have 20% of the population in the urban segment. You get it? And then let's say in Europe, you have let's say 70% of the population in that segment, the urban segment. You get it? And then let's say your company's cash flow, like cash inflow, depends on that urban segment because they are the ones who really need your product. You get it? And then you want an investment to maybe, let's say, relocate and then target these locations with the most urban segments. You get where I'm coming from? How would you get this kind of investment, and what are the sorts of investment you should look out for? I don't know if you get my question well.
Sorry, I was trying to unmute myself. A little bit. So let me share an example of an experience that we faced in Namibia, and then maybe you can rephrase the question because I think it may be related. So, for example, in Namibia, right? It's a 2.8 million population. So vast country, but very little population. So we were in a startup and we were part of a Y Combinator. So of course, the natural thing to do is to get international investors. Also, we are not Namibian, so we have a international network. And then the founder had a very US-based network, and he knew people from Credit Suisse, blah, 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 that's important banks. So it was easier for him to, of course, get funding from these investors. And also because, again, what I mentioned, like when you translate the money that we need in Namibia is much less than what we will need for the exact same business in Egypt or the exact same business in the US because of the market conditions, right? So when we tried to get the money from the investors there, from the US, they were saying, okay, this is nonsensical because 2.8 million, like, and it's only you're focusing your product, it's last mile logistics for the rural areas, for all the mom shops, the pop shops, like the Shebeen areas. I don't know how you call it in Ghana, but in South Africa, it's like Shebeen. So for them, they don't really understand this because in the US, you don't have that kind of rural economy. Like you have shops that are official, they pay taxes and so on. It's not this submerged economy. So they really didn't understand the problem, and that's a challenge. Like when your investors are too disconnected from the problem, you're going to get many more no's than you will get for a normal, like in any other business that they do understand, because you're still going to get no's. Like like people love saying no. I think like you're always getting more no's until you get one yes, and then all the other no's, maybe they come back and say, okay, now I want to invest in you because this other person, they invest. So it's a lot like that, unfortunately. It's like a boys club sometimes in VC. It's like, I'm only going to do what the other person is doing. So you really need to try many different angles until you find that one that says yes. So that's one of the things, like they didn't really understand the problem. So they don't understand the context, which is what I understand. Your business is very much focused on a specific context in a urban segment, and it's not like the more like the bigger segment in the population, right? That's what you said. So
yeah, that's what I actually said. So let's say you need to target the urban areas. You get it? But
yes, the urban area,
yeah. But looking at the urban area at your current location, it has a very little population. You get it? So
yes.
your returns from your product is not that enough, or it's not really what you want to have. And then let's say if you target these other locations with more populations in the urban areas, you are going to get more more cash inflows coming in because they would actually need your product. You get
In
what
the
I'm saying?
urban areas or in the non-urban? In the urban areas.
Yes.
Okay.
And then maybe let's say looking at the US like this, they have, let's say, out of 10 million in the population, we have maybe 5 million in the urban area. But in Africa, let's say out of 10 million, they have only 1 million in the urban areas. You get it? And your
Yes.
current location is actually in Africa. That's, let's say, in Ghana. But then this, with your product, if you move to the US, you are going to make more cash inflows than your current location. You get where I'm coming from.
Yes.
So if you want to make an investment on this, you get it, to maybe, let's say, relocate or try to market to target those customers from other locations.
Now I understand you. Okay, so what can you share a bit more about your solution? I will answer in a second, but with more information. Because basically what I was saying is what we faced, and this is Jabu, maybe you have heard of Jabu Logistics. This was exactly the same that we were facing this problem. It's like, okay, 2.8 million, and then you're only tackling the rural areas, and then how many of these people, like, you're going by city, so you're only doing it in Windhoek at the moment, so it's like, how many people, you know, like you only have like 400 businesses. I'm like, yes, but we have 400 businesses that are buying every single day. So in the first month, I'm already selling 1 million Namibian dollars, which is not, you know, not nothing. It's actually a lot. So it's just adding up these smaller pieces, and then we had to make a case about this is an underserved area. Like, brands do not know anything about this because they don't have visibility on the consumer behaviors. They don't know anything. They just know what the reseller is selling, but they don't know the final customer. Now we're giving you the final customer. We know where they live. We know their habits. We know what they buy, how often, blah, 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 blah. You know, like all of other things that then can become attractive. And that's why you are a startup. You're like proving that there is something there that you're, and then also because people are ordering from you, it's because they obviously need your solution. So that's why I'm asking if you can share a bit more specifically about your business, because in a nutshell, the answer will be, well, it doesn't make sense to move a business to a completely different market when it was designed for this other one with the realities of this other one. You know what I mean?
So sorry, 1 second, I have to interrupt because I just want to let you know that we have another session starting at 5:30. Okay, so let's try to keep on time the session.
Yeah, we will have another one for 1 hour. Is with the same group, yes?
Yeah, same group. Yeah, but with another speaker about selling in the European market.
No, I mean in February that there is a 1 hour session is with the
Yeah,
same.
we'll have an additional one.
Right?
Yeah, yeah.
So we can go on the questions. So I think we can close it maybe here with Kelvin's question, saying like, you really have to understand what is your solution and understand what is the problem it's solving. So if you want to move it to another market just because it's bigger, but then it doesn't solve a problem, that is not the market it was designed for. It doesn't make sense. There are a lot of niche businesses that are super profitable. Like, for example, if you think about high luxury products that are maybe for the 0.5% of the world's population, but they're charging margins of 100 times what the original cost is, people are still buying those super luxury products because, you know, they are tailored to them specifically. So as long as you are really solving a problem and then people are willing to pay for that solution, then you have a business case.
Yeah, so with what I'm trying to say, with our business, we are trying to sell out hospitality services beyond the boundaries of the hotel. So let's say if you have an Airbnb or a hotel, we sell out your services to be reachable anywhere, maybe around the world. Maybe let's say you want to sell out your conference meeting rooms for businesses to be able to book your meeting rooms, and also after booking your meeting rooms, they can now book in your rooms for your hotels, and have that meeting for that duration, and make other requests for maybe or any other services you have on the platform. You get to have that kind of experience, and then a smooth conference meeting. You get it. So we actually sell hospitality services to the public from hotels. You get where I'm coming from. But looking at the customer segments here in Africa, they will need it, but it's not a priority for them right now. But looking at other locations, like let's say SA, South Africa, where they are really interested in digitalization, and then and actually hospitality is really growing in the industry. You get it. and then we want to use this as an opportunity to create our product, to be able to, maybe let's say.
Faisal, ¿se está preparado el otro man?
Hello.
Sorry, Daniel, what did you say?
So I was trying to say that you are trying to use this kind of idea. Okay, yes, it will be of benefit to hotels, and then also it will be of benefit to businesses, and then let's say remote workers, for example. But in Africa, in Ghana here, we barely have remote workers, and then we barely have businesses who may want to, explore experiences, or even we barely have travelers and tourists who may want to explore your services. You get it? I don't know if you get where I'm coming from. So
Yeah, but I understand also your question, but again, if you want to move to a market, it's different. The market conditions, of course, are different. So what I will suggest is that you try to see sorry, by pre-registration, like pre-booking interest. I mean, it's a different question than funding options here. What you have in hand, to be honest. But I'm happy to provide some insight. It's try to create the interest, pre-register people that are interested. So try to gather the actual interest. Will people pay for it? And it's not asking in a questionnaire like, oh, will you pay for it? Because when you ask people, they would say, yes, I will pay. And then they put a price. It's more about, okay, now can we sign a letter of intent that you're going to hire the service? That's how you get cash on cash. That's how you get the reality of the business. So for me, it's not a problem that the urban segment is just 20% of the population, and it's maybe not too big. You need to start somewhere. You cannot say, unless you have a product market fit, it doesn't really make sense to start going and changing markets or expanding to other markets.
Yeah, I was trying to say, in terms of investment, you see, as you were saying, the one who is going to invest is going to evaluate your cash flows, and then maybe and normally they look at your cash inflows, for example. Okay, so let's say you have customers using your platform, but the cash inflows are not that much. You get it? Will it be?
Yeah, but that's why, like, the cash inflow, like consistent cash flow, it's typically for maybe like loans and banks, because they are the traditional avenues. But what the non-traditional financing avenues, so venture capital or crowdfunding and so on and so forth, what they want to see is a potential. So they want to know, yes, all these people will buy from me if I have the solution. I still have not created it, but I already have sales. I have seen a lot of businesses, they sell it like they already have it, but they haven't developed it yet, because you don't want to spend maybe $100,000 or even $10,000 to create an app nobody's going to use. You see? So this is like even earlier idea. You are validating your idea. This is before funding. So we don't have more time, unfortunately, to go deeper, because you have already another session. And yeah, I put here my, this is a WhatsApp community where I share some opportunities for like grants or accelerations and so forth. So if you want to scan it, happy to connect on WhatsApp.
Okay, I have to interrupt because it's the time. So we have to continue with the next workshop. So I really want everyone to stay with us to keep working on this session, because now we're going to discuss how to enter the European market. That is a really interesting topic with our new speaker, Andrea. So thank you so much for your attendance, Crystal, and all the really good insights and advices to our entrepreneurs.
Thank you.
Pleasure.
Sorry,
Thank you.
Daniel, I want to ask a question. Daniel, I joined, I attended the session yesterday. You shared the link, but I forgot to tap on the